Hello there, I'm Malcolm Graham Wood, and I'm here at Core Finance for my regular CEO interview. I'm delighted to say that my guest today is Paul Baay, who's the CEO of Touchstone Exploration. Welcome, Paul. Great to see you.
Great to see you as well. Thanks for having me today.
Absolute pleasure. I've been watching Touchstone for a long time. Viewers will know that I wrote about this company a long time ago when I met Paul to begin with, and we looked at the field maps way back. And I've been so confident that this day would happen that I'm glad that we're here on a really good day for you. So before we get stuck into to the meat and drink of what you've been here saying this week, perhaps you could just give us a quick overview of Touchstone for people who don't know very much about it.
Sure. Touchstone's obviously a public company, trades on the AIM and the Toronto Exchange, but all of its assets are in Trinidad. So all of our production, oil and gas production in Trinidad, and when I say oil and gas is fairly new. We've got two main gas plants in Trinidad. The first one was Coho that came on October 10th last year, and then our Cascadura facility, which we're going to talk more about today, which is really the big game changer. It came on a couple of weeks ago in September. And then we've also had some other drilling, exploration things along the way. Royston's one I know you and I have talked about before. It's still in the evaluation stage, so
Good.
So that's where we're at with that one.
So Cascadura is now on stream, but it was slightly later than expected. Could you sort of shed some light on? I mean, we know what the reasons for the delay probably are. I don't, but what the delay was and what it might mean for the company, why it would.
Yeah, I think it's really important. Like we need to really look back, and if I'm going to be really transparent, it's not only months late; it's probably a year and a few months late. When we originally started that project, we thought we could use the existing approvals we had to drill the wells, build the plant. And what we found out after we made the discovery, and it was partly because the discovery was so large, and the plant that we were going to end up building was so large, that it triggered a thing called an EIA, an environmental evaluation. And that took us a year. You have to do a dry season and a wet season.
Yeah.
So that pushed everything out by a year from our original forecast. And then once we got that done, which was basically August of last year, a little bit over a year ago, we then went ahead and started to actually get in the field to do things.
Yeah.
November, December, two of the rainiest months in history in Trinidad, while we were trying to start the project. And then we found out that the concrete pad that was there for the drilling wasn't going to suffice to hold all the big equipment that we had. So we then had to re-pour, I think, 90 truckloads of concrete, and that took us an additional period of time.
Yeah.
So that was a bit of a delay. And then after that, the plant was quite complicated, logistics in and out. We were getting supplies from Houston, from Canada, and it just took us longer than what we had hoped for. And at the end of the day, I would say that we really had hoped it would come on the end of June, and it came on in early September, and really full production here. So.
When you look at the size of it, that's to a certain extent within the range of what you're going to come out now. I'm going to come on to the extent of the revenues and so on in due course, but just for the time being, it's you're still preserving cash. I know that CFO Scott Bideau is making sure that you're under the thumb a bit for a little while until you start to get the revenues coming through. And you're just being tight with yourselves at the timing.
Yeah, and it gets back to this when we hoped it would be on in June, right?
Yeah.
So it's taken longer to get on, and it generates $4 million a month of revenue. So it doesn't take long to build that up, but it has taken longer. So it's just pushed out the rest of the capital program in what we've done. But the bank's filling up every day as we produce here.
So that's my next question, the success of Cascadura. So it'd be nice to go through in a bit more detail. You just mentioned the revenues, and when you're up to peak straight away pretty much, how much money will come in on a regular basis. And tied to that, interestingly, you said earlier that you're an oil and gas company, and when we first started, you were an oil company. Now I think you said in your recent statement that you'll be 78% gas. The gas prices and the contracts, and the oil prices and the contracts. So a big question, but maybe you run through the money and the contracts first.
Yeah. So the way the market works in Trinidad is you sell to the national gas company and you sell to the national oil company your liquids. So those are the two products that we have. The national gas company sells to the petrochemical business, LNG, and their other power plants on the island. So they give you a fixed price contract, but it's not totally fixed in that what you end up doing is you got about 4 or 5 years of a fixed price with a 2% escalator, and then you renegotiate at the end of that. So there's that. But the other part of that is they build all the pipelines into your facilities. So you don't have to put up that capital to build all the pipelines in, so it's a bit of a trade-off.
That's very useful.
Yeah, so we get about 220 an MMBTU, which at Cascadura, because it's a little hotter gas, is basically 250 an MCF at the wellhead.
Yeah.
So there's no transportation, there's no additional processing, there's nothing. And at Coho, it's a little bit less, about 210, something like that. That's on that side. On the liquid side, we basically get a Brent price less anywhere between 15 and 18%. And both these are paid in US dollars, both of them paid on the 25th day of the following month. So, we don't have some of those other issues that some of the internationals have. It's a good form of payment for us.
That is interesting. I mean, if you are going to get paid on the 25th of the following month, every month regardless, and it's never gone wrong. And so how much are you going to be getting? You say 4 million a month revenue from Cascadura from...
Yeah, the revenue is actually higher. That's actually what we take home after we pay everything, like our G&A, our taxes, our royalties, everything. That's 4 million. So the revenue number is actually higher than that number. So that's what we'll call our cash flow every month is $4 million. So
and you think that you'll be on to a sort of normal straight, maybe after another quarter, I would guess, when Scott starts to releases the reins a little bit. The next question is obviously what are you going to do with the money? We've got lots of questions about that in our chat today, I hope. But one of them is that I know the market was asking many questions about your debt. And I noticed when I watched the capital markets presentation that you've got quite smart moves on the debt. What are your plans with the money? Yeah,
so what we have is we have a $7 million operating line that's fully drawn right now. So basically we'll use the first month and a bit to pay down that operating line.
Yeah.
And then the rest of the debt is a term debt facility. And the after-tax cost of that's about 4%. So that's a really low cost of capital.
Yeah.
We're just going to leave that in place. We're not going to take that out. It doesn't make any sense. And then basically what we'll do with the cash flow then is just drill wells. I mean, we've got 2 gas plants that are now available for 225 million a day of gas processing, and we're only doing 65 million or 70 million a day. So drill and fill.
Right, so that's the next question. Capacity, number of wells to drill, and so on. So that if you could expand what you've just said in a bit more detail. So you are producing at the moment from Cascadura how much? 60
million a day, roughly, give or take a couple million on either side on any given day. But
plus liquids,
Plus liquids, that's a good point. 60 million plus about 1,400 barrels a day of liquids. Now that's 100%. We're 80% of that volume.
Yeah.
But those are the gross volumes.
So you've got a lot of wells to drill. I've heard the sort of magic 200 wells number, but it could be even if it was 100, let alone 150 or 200. So, and the other thing was that you're going to have 2 rigs going all the time. Is that right? So is that? Well, tell me the plans about drilling on Cas.
Yeah. So Cascadura, we've got one big rig that we brought into the country. It's going to drill all of our deep plays. So it'll do the follow-up Cascadura. It'll do some of the exploration. If we have success at Royston, it'll do the follow-ups at Royston. So there's that big rig that'll kind of move around on the east side of the island. And then some of the shallower wells that we have to drill at Coho, which are the 2 follow-up wells at Coho, or some of the stuff on the Legacy on the west side of the island, we would use another rig for. I wouldn't see it be a continual 2-rig program.
Yeah.
The plan would be to have the big rig drilling continually.
Yeah.
And then we'd bring in the small rig when we needed it sort of to do the development drilling that we want to do.
So you mentioned the capacity is about 200,000. Yep. So with 60 at the moment, you've got masses of scope to increase. No reason why you shouldn't be bringing that on all the time. I mean, how long does each well take, a deep Cascadura well take?
So those deep Herrera Cascadura wells is about 6 weeks. Right. So not very long. Right. But we're going to actually drill 3 off of the same pad. Both environmentally, that's a good idea, but it also saves us a ton of money.
Yeah.
But that means you can't test the first one until the third one's done. So you basically drill all 3 of them, then we'll complete them
Yeah.
at the same time and bring them all on. So you get kind of these big step changes
Yeah.
in the production. So our plan right now is to have that production come on in the second half of 2024. We're looking at about 20 million a day per well.
Yeah.
So theoretically you could double from where we are, 60
Yeah.
to 120 in 2024, plus the liquids. Although these are up dip a little bit, so they may not have as many liquids as the other prospects.
Excellent. So those are all development wells. What about the exploration
Yeah.
opportunities?
Yeah, and I think that's one of the unique things is we spent a bunch of time at the capital market sort of talking about the development yesterday. We've been an exploration company. You and I have been, following this company well by well, and that's
Yeah.
good and bad. But we still have the same exploration prospects that we had before. I mean, we've got the Herrera plays, and then we've got this deep Cretaceous play that's going on in Guyana and Suriname right
Yeah.
now. That extends right up into Trinidad. And, the technical team has identified 3 or 4 of these Cretaceous targets that we want to drill. So there's sort of this Herrera development, there's Herrera exploration, and we'll talk about maybe some of the crown lands we picked up. And then there's this deeper Cretaceous play as well. So, we've got this sort of a portfolio, not only of development wells, but a portfolio of exploration as well.
That's where Xavier comes in.
Yeah, him and James, our COO,
Yeah.
they've worked really well. They've got a lot of years' experience, and then with Xavier having the local knowledge, you put those 2 together, it works out really well.
So just finally on that piece, what's the reserves number look like then?
So right now we're about 75 million BOEs. We want to get north of 100.
Yeah.
We think with the prospects that we've got right now, we can certainly be north of 100 million BOEs. We'd like to be there by the end of 2024.
Yeah. So as I said the other day in the blog, you're now a fully financed, full cycle E&P company. You've committed to Trinidad as a base for the growth of Touchstone and your portfolio. Run through the pluses and obviously not many minuses. Why are you staying in where you are in Trinidad?
I think the biggest plus is the demand side. So they've got this huge petrochemical business there. They've got LNG and a domestic market that generates electricity by using gas. So right now their demand, if they had everything running, they need 4 BCF a day of gas, 4 billion cubic feet. They're only at about 2.7 billion cubic feet a day. So any gas we find has a home. It's 100% load factor. We get paid in USDs. That's brilliant on that side. On the oil side, any oil that we find, same thing, they market it for us, the whole system. There's pipelines, everything in place. Probably the one negative at Trinidad is the tax rate that you see. I mean, it's a higher tax rate. We're making little steps ahead. If you look back the last 5 years, we have made some little steps and had a good meeting with the government when I was down there a couple of weeks ago for them to understand what they could do to increase production.
Yeah.
I'm not saying anything's going to come from it, but there is a dialogue, right?
And you mentioned fixed costs the other day because, of course, the faster you grow, all the things you've just been talking about, your costs are fairly fixed, aren't they? So you get more profitable.
Yeah, you don't need 2 of me, you don't need 2 of Scott.
Yeah.
And when you get down to that, that area with the staffing that we've got down there, there's some capacity for us still there. The advantage of all of that, I talked about the fiscal regime and we talked about Cascadura taking longer than it should have because of some of the regulatory things. It's also a barrier to entry, right?
Yeah.
It's pretty tough for somebody to set up in Trinidad right now. We've got a...
And you're the largest onshore player now.
We are, yeah. And we got a 10-year head start on them, so we know all the players, so I think it's important.
Now, I really want to have a chat about the new licenses.
Yeah.
Because they've just had a license round. We started talking about this about a year or so ago. It seems like you got what you wanted, but talk me through the situation, what you got, how it's going to play into your portfolio of assets.
Yeah, so we really, there was 5 different licenses that we bid on. There was 2 that we really wanted. The number one by far was the Sapero license, which sits right north of our Cascadura and Coho properties. And the key thing about it is it's already covered by seismic. We already know the prospects. We know that it's right in the neighborhood. And again, back to what we were saying, we could bring any of that product down to Cascadura or Coho. We don't need to build another facility to bring those on. And when I look at it, the geophysical and the geological, it's as good a prospect as we've seen anywhere out in that eastern side of Trinidad. So that's Sapero.
Yeah.
And then north of that is a huge block called Chiruma, which they sort of...
They didn't,
but and we went back and had a conversation and agreed to up our minimum work requirement. And it looks like we've come to some sort of an agreement on that. But that's really for that big exploration play. That's that Cretaceous play that sits up there to the north. The nice thing is, as you go north, though, it becomes shallower. So instead of
Right.
drilling to 14,000 feet, we think we can evaluate that concept with a 7,000-foot well.
So no wonder you want to stay where you are, and you'll be the big fella in the region, and quite rightly too.
Yeah, I refer to it as the big fish in a small pond.
Very good idea.
There you go.
Very quick word on ESG, because I know that, like everybody else, you're in line with what people want, or expectations. Just touch base on your recent announcement on ESG.
I mean, it could go on. We obviously do a lot of things, but I think the best thing would be is for people to take a look at our website and our ESG report. The team put a bunch of time, and I think it's got really good disclosure in it. So I'd encourage everybody to take a look at that on our website.
Good stuff. 2 or 3 things I just want to tie up on. First of all, you're in Trinidad and you're staying in Trinidad, and you're the largest onshore player. But it doesn't mean to say you can't think about M&A opportunities. I mean, we know that there are lots of opportunities on either asset play or corporate plays, and the thing you can think about in terms of inorganic growth, or keeping your eyes open once the revenue starts to come in.
So short answer to that is yes, we want to do that. And if you look at us historically, we built part of this asset base through acquisitions. We did 4 acquisitions to get us to where we are now. And again, that's in the presentation. I think a good illustration in the new presentation on the website. So yeah, absolutely, we think there's some synergies. And when you talked about fixed costs, that's one of the big advantages. Is you got to get the fixed costs down. And with that higher tax structure in Trinidad, you got to get your netbacks up as best as you can. That's the only way to make it work there.
And all onshore, or?
Yeah, I think so. Like the big guy, like I can't compete with Shell, BP, and EOG, right?
No, but one to the others have got little bits of offshore.
Yeah.
Which is almost onshore, isn't it? It's one to the are almost sort of piped from offshore and so on. So
I think the big thing for us is the rocks. We sort of understand this turbidite model, whether it be the Cretaceous or the Herrera, and I think that's what we really want to focus on. And if that spills a little bit to the offshore, ideally if we could drill it from onshore to offshore, that would work great. But I think it's going to be more about the rocks and staying in Trinidad. Like we do not want to look outside of Trinidad at this point.
And shareholders can expect sort of constant feed of news now for the next few months, can't they? As various of these things come on with from Cascadura and so on. So you've got a market cap of about £150 million. I've always said, in fact, I said that this could be, one of the shares of this year, which probably run into next year because of the delays and so on. But how would you think about valuing a company? Would you like to say, look in 6 months' time to see what the revenues from Cascadura or from the whole company are, and value them multiple of that? And you clearly think that the shares are remarkably attractive at the moment.
Yeah, I that is always a struggle, and I would always hope a CEO thinks his shares are undervalued, right? But I think this has had a pretty good run. There's we've got a lot of retail shareholders that came in at 7 and 10p when you and I started talking. So I think there is going to be a bit of a shareholder turnover here now that Cascadura has come on stream. So I think there will be a little bit of that happen. But when you look at this, like we've taken a lot of the risk out of this company now. We've got this great production base. So from my point of view, I think you can look at it in 2 ways. We're going to have, probably close to 50 million of funds flow, just based on what we have today. And that assumes nothing else works, which includes development wells. So you can easily see that number going up pretty dramatically. And then if you look at our third-party evaluation, it's something that's around, upwards of 600 million. Yeah. So take the difference between where we are today and there, that's probably the goalposts of where we look at. So I think it's nice to be on sometimes when you're out traveling and doing these things and talking to people about it. Yeah. It's a pretty comfortable time. I don't think people that are going to buy this stock at these levels are going to get hurt, and that's a really nice way to have it. Right?
I've always said that this is a chance to get the capital value of the shares up, and then wait for a while before you start to try and decide to anything else.
But may not be the big excitement that some people like some of those that really like the excitement of the exploration.
Yeah, but that's traveling and arriving, and I think the thing is, in my view, you've travelled. You've got to the stage where you've got the big Cascadura fish in there, and it's going to come through, which gives you the opportunity to do so many other things.
Agreed.
I think the expression you used yesterday was the hard work has been done, Took a little bit longer than expected, but I think you said you've got the people, the prospects, and the predictable oil and gas pricing. It looks good. Now it's up to you to do the execution bit of it, which I'm sure you will. As we get to the end of the interview, because time is always our enemy, but I just wondered if you can put everything sort of together that we've talked about this morning and say, where would you say you would like to see Touchstone over the next maybe 2 to 5 years? You've got such a good predictability from Cascadura. You've got a longer time frame than most companies would. You know, I ask most companies what's it like in 18 months, but at the moment, with all the predictables that we've talked about, you're in a stronger position than that. How do you see it over the longer term?
So if I were to summarize it really simply, I think this is the end of the beginning for us. You know, we strive to get to where we had free cash flow that could fund this development program and exploration program in Trinidad. That's where we are now. So when we look out at the next 2 to 5 years, it's really a case of drilling up the development wells, and I think we're going to have some success on the exploration. We were 50% on the exploration successes in the Oratwa block. That's remarkable when you look at an true exploration program. So when we can fund both the development and the exploration program and grow the production, where do I see us? I mean, one of the things we talked about yesterday in that capital markets is we think we can be big enough to be in the FTSE 250, which should put us in that 750 million pound range, right? That's where we'd like to be if you ask me where we want to be. And I know some people think that's pretty lofty, but when we said we were going to be the biggest onshore producer in Trinidad, I think they saw that as lofty as well.
Yeah, well, so, again, nothing wrong with high-flying ambitions, and I very much appreciate it.
Yeah.
Paul, thank you very much indeed. It's been a joy to talk to you this morning and to hear a bit more about Touchstone and what's been going on at Cascadura and so on, and the rest of the company. Thank you very much for coming in today.
Always good to chat. Appreciate the time.
So, I've been Malcolm Graham Wood and doing my CEO interview here at Core Finance. My guest today has been Paul Baay, the CEO of Touchstone Exploration. I'd like to thank him very much indeed for joining us. And as well, thank you for watching, and we look forward to seeing you next time. Bye now.